Joining us now to discuss BTC price and more is CoinDesk markets reporter Damanick Dantes in New York. Hello there, Damanick. Good to see you there.
Hey, good to see you.
So what kind of trends in Bitcoin's price have caught your interest lately? What do you see developing?
Trends-wise, we've been seeing some lower returns. Recently, we had a pop-up over the past weekend, but during that weekend, we also saw Bitcoin dominance tick up as well. So that means altcoins have been underperforming on the upside. So that to me says the risk-off sentiment that has been, constant throughout this year has been persistent. So, investors are still not comfortable with taking on that additional risk, given that Bitcoin has been outperforming on the downside and the upside. So upside remains capped for now. Volatility is still relatively low, and seasonals haven't been a useful gauge so far. So It's been very choppy.
Dominic, what do you make of that flight to Bitcoin and decreasing interest in the alts?
I think you said it earlier, it just shows that the outside space has been growing more. So that kind of diminishes the market share for Bitcoin in the overall ecosystem. And then also it could be a risk off indicator as altcoins are heavily bid up because of their risk nature. They tend to outperform in up markets very strongly. And in down markets, a lot of that speculative activity and leverage tends to get washed out. So we're along this deleveraging stage. And also as people reduce their leverage, traders reduce their leverage, they're also reducing their exposure to risk.
Have you also been watching or subscribed to the idea of a decoupling between Bitcoin and the wider equities markets?
Short term, there has been some variation. The correlation is not one-to-one, so they're not moving in direct lockstep. We measure correlations over a 90-day period. So these are like seasonal trends that you're seeing with asset classes moving together. So yeah, if you're a very short-term trader and you're looking for that arbitrage of sorts, then hey, you might look for that decoupling. But if you have a longer-term portfolio, you want assets that are not that are offering some diversification. So that's a much more condensed argument. That's how correlation works.
And you touched on seasonality. So we're starting the month of June. What do we historically see Bitcoin doing in the month of June?
Historically, it's pretty good. So, your average returns are about 9%, and then your odds of that performing positive for that month is about 63%. So the odds are pretty much in your favor. They were the same in May, but May we decoupled from that seasonal trend. And of course, you have these unprecedented macro environments, geopolitical risk. And then, of course, midterm elections, that tends to be a headwind for risk assets in general. Stocks follow a very similar pattern. Without that election and sort of risk on the horizon, these seasonals tend to give you some gauge of an upside during the spring months. That's not working for now. So what I would generally see is couple those months together and see if you have better odds of outperformance during that summer month going into September. And your odds are just diminishing. And especially September is a very weak month for risk assets in general. So at most, we can just probably see stabilization to a slight downside.
And so what do you see as the support and resistance line for Bitcoin?
Support right now, very short term, initially is around 25 to 27K. 25 is that recent low that we saw earlier this month. And then secondary support is around 17.6. And then resistance around 33, which is where we got over the past day or so when that relief rally kind of stalled. If we see additional upside, there's a lot more resistance around 35K, which is where the prior breakdown occurred, which was the last range-bound movement that we saw. And then Bitcoin rejected that to the downside. So right now it's pretty much stabilization with lower highs, lower lows.